Okay, Mary Ann, can you take the roll, please?
Mr. Gritchen?
Here.
Ms. Fresca? Here. Dr. King?
Here.
Mr. Moon?
Here.
Mr. Walsh?
Yes.
Mr. Welch?
Here.
Mr. Cindy?
We have 2 seats up here in front. All right, our first item on is FOIA request.
2 FOIA requests this month. They were included in the packets. One regarding Freedom of Information request related to the previous referendum and the documents produced by the district, and another one was from a third-party company regarding our special ed services. Our legal counsel worked with us on both responses, and timelines were addressed accordingly by Mary Ann.
Okay. Next item then is the monthly budget report. Tim?
The monthly report is in your packet. The total revenue for the month was about $3.5 million. $3.1 million of that was property taxes. Property taxes were due on March 1st, so we did receive some revenue in the month of February, but the bulk of it's going to come in the month of March. There was a question regarding the current year, or regarding the total revenue was at 61%. The total revenue for the first 8 months was at 61%. We're 67% of the way through the year, and the reason for that is that we've just started the collections on the current year property taxes. We received a little over $3.1 million out of a budget of $12.7 million, so only about 25% of the collections that are due in the spring. That money was due March 1st, and on the first couple of days that we received collections in the month of March, we collected an additional $3 million. You can see in March, you know, if that $3 million had been added to our total revenue in February, we would have been up around 71%. So we're going to see a big influx of revenue this month, and that percentage of 61% is going to go significantly higher when we get to next month. The current year collections, based on prior year, we ran about 97%. We should have about $9.1 million left to collect just on our spring collection, and plus, as I mentioned last month, probably another couple $100,000 that we'll receive on the prior year tax collections. Let's see. I did last month. I gave you an estimate on prior year collections that we're going to be at about 93% to 95%. We did get another $167,000 of tax collections from the prior year, which was money that was due in November. So we're still receiving money from that period, and now in March we'll receive the bulk of the money for this first collection of the calendar 2012. There were some other items that I highlighted in terms of the revenue that we had received. I also highlighted the fact that we did receive some, refunds during the month, and our total refunds for the year are $307,000. We have a budget of $848,000, so we're $540,000 under budget there, which is a plus to our revenue. I talked to our attorney today that handles the refunds in that, and asked him if there was a way we could get a handle on what the refunds will be towards the end of the fiscal year. And he said there really isn't any way. He said that right now there's about 28,000 appeals that are still out there for the 2009 year. And he really doesn't have any idea when those things are going to go through. There's also, where there are errors in the senior and the homeowners exemptions, people have up to 3 years that they can go back and file for refunds on that. So
this $500,000 could go away
Very quickly.
it could, yes. If I look back at prior
behavior
years,
serves us.
yeah.
Okay, thanks.
So, I think that's about it on the revenue side. One of the things that Kevin and I were talking about a little bit in trying to do this analysis of the financial statements for the board meetings. The board meetings tend to be very early in the month, and they're action meetings. The bills obviously have to be on that agenda so that there's action to approve the bills. The financial statements are really more of a presentation. They're not an action item. There are some months where I get the financial statements like on a Wednesday morning, and by Thursday morning, I have to have the report done. That's not a lot of time to do a real in-depth analysis. We talked about the idea that maybe starting in July, starting next year, what we would do is move the financial report to the committee of the whole meeting later in the month, and that would give the business office, give me more time, to do an analysis of the financials once I receive it. It just, sometimes it's a very short period of time. This month I had a little bit extra time because the meeting isn't till the 13th, but there are some months where if the meeting is earlier, if it's around the 7th or the 8th of the month, it's very hard to do a real in-depth analysis when you only have a day to do it, and there's other things, that come up during the day that you have to work on. So that's just something for us to think about, I think, in terms of the financial analysis.
Any questions for Tim?
I have a question. It's the synthesis of the information that we're struggling with. Whether it's the first meeting of the month or the second meeting of the month, for me, that is irrelevant. The problem is, last month, and when I raised, you said we had 59,000 in refunds out of 848. We're going to be way ahead of budget. Now this month, we had 150,000 more in refunds, and based on your report, there's no reason to believe we're going to be ahead of budget at the end of the year right now.
Yeah, as I say, the refunds are a difficult thing to project. You
I
go back
understand
and you
that.
look at history. Well, but I think the board had been asking for some kind of projections on things. So what I did was I looked at the refunds last month, and I looked at historically what those refunds have been as we get into the second half of the year, and it looked as though we were going to be significantly under budget. Now that dropped this month.
But here's the struggle that I have. We're 2/3 of the way through the year. We're going to be asked to cut budgets, to cut budget for next year, to cut people for next year. And our only target and our goals is what our reserve percentage is, that we stay above 20%. And last month, another thing that was last month, it mentioned about the timing of the receipts, but right now we're $345,000 under the first, what we budgeted for the first installment, which there's no reason to believe we're going to get a big chunk of that anymore. So
Why
that
would you
puts-
not believe that?
Because
Because he just got 160,000 this month.
that
from-
was a credit that we had to pay out.
But it's money that is helping us out, so, and as it was explained in the prior
Hold
board
on,
meeting.
Matt, I
Okay.
don't want you to editorialize. If you want, I can read the
No,
president's.
what I'm saying right now is at the
I'd like to
last
fin-
board meeting, though, we talked about the revenue short, and it was stated by Mike Welch that taxes are going to be paid. You are still owed those taxes. When you get those taxes are still owed to you. So are we getting, let me ask you a question right now. In this fiscal year, were we getting tax payments from prior fiscal years that were not paid to us?
Yes, you do get some, not a lot. But
Okay.
the 167,000 part of that we got in the month of February was what we should have received in November.
Okay.
But we're still getting money from that fall installment, and we'll continue to get money on that. If we look at it historically, we continue to get money on that all the way through the end of the fiscal year.
But
Well,
that
first
doesn't
we have to-
answer Tim's
It
question.
didn't answer my question, as I promised I would do, Matt. We've got to I don't want you to editorialize or cut me off. As the president, you have the same role at this meeting as I do, except for the ceremonial. So let me finish, and when I'm done, if you want to add, don't let people to believe you can cut me off and synthesize what I have to say.
You asked this question about
Mike,
this
I wanna-
line item last month, and he answered your question that I believe you're bringing up the same question.
I am bringing up the same question.
And he answered it last month by saying he believes we're going to collect 97% of that line item.
Is that what you're saying?
I mean, did you not understand his answer last month?
I
Or are you
guess-
asking him the same question because you don't know what he answered last month? I'm unclear.
Well, good, because the question is for Kevin or Tim. It's not for you either, Mike. Are you telling us now that we can count on receiving the full amount that we budgeted for the first installment? Because I don't think that is what you said last month.
No, on the first installment, I said we're going to come in under budget.
Do we know how much under budget we're going to come in?
Last month, I estimated about 700,000.
But we're already closer than that. We're only like 350 over budget now, right?
Well, no, that was assuming that we were going to pick up, another 230 to, I think I said $460,000
Okay, and last
from
month,
January through June.
you predicted we're going to be way under on the credit what are you predicting now? Should we predict that we're not going to be under the credit or that we will be?
All I can do is look at history. I mean, I can
Okay.
predict that 500,000, we shouldn't lose all of that, but I can't say that for sure. I mean, it may be that by the time we get to June, all that 500,000 is going to be refunded.
So to clarify for me, because I'm a little slow on the uptake compared to some of my peers here, out of the three big ticket items, which are on revenues, the second installment, the first installment, and the credit, 2/3 of the way through the year, is there any way for you to predict how much we're going to be under or above budget in our revenues for this year?
I think we're going to be under budget on the what they call the prior year collection, which is in November.
Right.
Okay, I think that was budgeted too high. I think we're going to come in based on history at about 97% of the current year collection, which is what we're collecting right now. We've collected a little over $3 million. If history is our guide and we collect about 97%, we'll pick up another $9 million in the current year collection. We have a budget of $12,300,000. And the refunds, as I say, we're sitting at $540,000. Where that's going to come in at the end of the year, I don't know. I mean,
So-
it certainly looks like that the total of $850,000 was budgeted very high based on what happened a couple of years ago, which was an unusual year. But where we're going to come in exactly, I don't know. I mean, I can estimate it based on history, but if things change.
I'm asking give us guidance. Should we rely on the budget, or can you give us some number of what we can, $200,000 is 1% of reserve, right? So if we're going to come 200,000 over, that's 1% of reserve. If we're going to come 400,000, it's 2% of reserve. And everybody says you reported this last month, so it shouldn't, I'm just asking for clarity. Is there any guidance number that we can assume we're going to come in higher on revenues for this year?
Total revenues?
Yeah.
I'd have to sit down and look at it. I mean, I've looked at the property taxes. I put together a list of some other items that I said we're going to come in about $380,000 over budget. But in order to do the whole analysis of it, I'd have to spend some time putting that together.
Okay, well, this is what, I think that's pretty much what you said last month, which is fine. But I think what's important is if we're doing a report, we get some indication of whether there's big variances in our revenues and expenses, so we know as soon as possible whether we can weigh them into our predicament for adjustments of what we need to cut for the following year.
I think,
Okay.
hearing your rationale on that, to figure it into these cuts, I think we still have to play it conservatively and go in there thinking that we have to just like we talked about, possibly, over riffing a little bit, having a plan so that if things come in better than as planned, we can always bring some things back.
Well, they're two separate issues. One is just having the information so we know. The other one is how we use the information to weigh it into the decision-making process. But without the information, we really can't weigh it into the decision-making process. That's what I'm struggling with.
Yeah, and I thought, when the question was raised about presenting comparisons on some of the major items, that's what I've tried to do. I've compared, what I think we're going to collect on prior year taxes, the November collections. I've tried to project what I think we're going to collect on the current year, which is the March collections. And I listed about 5 or 6 other major accounts in terms of where I thought we'd come in on budget. Again, if there's more detail than that, I mean, I can go through and I can do a bigger projection, something more detailed and put it into the board packet. I can,
So, can I ask Tim, and I don't want to put words in your mouth, but is it fair to say that if you had to take a stance here, you would feel more comfortable saying that you anticipate property tax revenues to be coming under budget of what we budgeted, under what we budgeted at
Yes.
this stage of the game? And you just don't have a feel for it based on the fact that PTAB, the potential refunds can play a big plus or minus in the game?
right, the P-tabs are a big factor. We're sitting.
Could go from 50,000
Could
to
say-
350,000 to 500,000. We just don't know because we don't have any visibility to it.
Correct.
But right now, I don't know if you would say that you feel that we're going to be coming under budget in revenues.
Yes,
By 3%.
yes. I said last month that we'd come under by about $700,000 on prior year tax revenue, which is the money that we were supposed to receive, that we budgeted to receive, in the month of November. And we're gonna still receive some of that, but I think overall, what we consider prior year tax collections are gonna be under what we budgeted.
Okay, so then the potential on our ending fund balance will be closer to the 20 than the 23 that we currently are shooting for.
Yeah, as I said.
I don't know where it's gonna wind up.
I think we're gonna pick up that 380,000 that I talked about. You know, that's gonna, obviously, if we come in 700 under our prior year, we pick up 380, you know, then we're off by, you know, $300,000, a little over $300,000.
Thank you.
Any other questions for Tim?
Yeah, I do have a couple of questions. I have a question on the revenue side,
What page?
on handwritten number 5. I'm just curious on, this is in the revenue, what the Title II teacher quality, is that a program that's grant funded or?
That's a grant. It's part of what they call the NCLB grant, which is Title I and Title II. And Title II is basically used for professional development for the teachers that you have in this.
Okay. And then I have a couple of questions on the expenditure side. Again, with the
Page number.
budgets, if I look at page...
Can you give everyone a page number so we can
No,
get to
Mike, I
it?
can't give everybody a page number if you interrupt me.
You should start out by saying, I have a question on this page number so we can all get there, so we can follow your question.
Mike, I'm going to ask the question, and then I'm going to give the page number so I can acclimate Tim to what the question's about.
Page 25 or 26.
So I have a couple of items here. What I'm concerned is that the few items I'm going to mention is that we're not going to budget enough for them next year. When we develop our budget next year, we've been going on history, not actual. And if I look on page 26, we have dues and fees. There's a couple items that are over 100% expenditures for the year. If I cross-reference that,
Give me an account number that shows that.
just go down the column and look for anything over 100%.
So give me an example of what it is. Show some respect to the board and highlight what you're talking about.
All right, if we're going to talk about respect, we're going to all respect each other and allow each other to ask questions and not interrupt each
You
other.
can talk about that. We're asking for a page number so we can reference it, and we ask where you're talking about, so,
So this is the account number.
all right?
10-1500-6400-60-17150. That's
Okay.
one of them. Another account number is dash 10-1500-6400-60-20150. If you go to page, so those are dues and fees that are over, Tim. And it may be that dues and fees have just increased. But then if we go to page 29, there are three areas where I'm concerned. And it's it's in the third cluster there. And it's the overtime salaries, which would be 10-2120-1330-14-212. We're over budget in that area in our overtime salary, so I'm concerned again that we have not built that into the upcoming budget. And then on the last group, on page 40, when I go down that column and I look at pupil transportation, and it could be a factor that we have increased gas prices or doing more transportation. It's across the board. We have several counts that are over 100%.
Tim, is any of that on the pupil transportation due to the are we still waiting on any reimbursements?
No, that money's already been received and put back into those accounts.
Is there a chance it was sent to the wrong account? And we gotta look at that anyways, since we didn't
Yeah.
put this together, but I think they did a separate transportation account for each different sport and
Yeah.
each different activity. It might be easier to just have that all in one transportation account.
But if I look at, so Laura, I'm gonna, ask you a question back. On the one that you talked about on 29 overtime salaries.
Right.
Over $302.50. However, when I look at that whole cluster of expenditures, and tell me if I'm wrong, Tim, on that one, we are still with a budget of, total year budget of $788,780. We have only expended $476,561.72. And we still have left in the budget $311,969.24, which is about 60% of the budget, and we are at what, where are we at right now in the year?
67%.
67, so we're under budget there.
Well,
Okay, for the
yes and
total
no.
thing.
I mean, you're editorializing, but this is one area out of this cluster that is at 160% of expenditures. So as we cut staff, I'm concerned that we will be relying on non-certified staff for overtime. And I think that's something that we have to be cautious about building our budget going forward, that this particular line item could throw this section over budget.
And then I'd like to go to the next one, pupil transportation, and tell me if I'm wrong on that one.
What page?
Page 41, for the account total for that account, we have budgeted for the whole school year $345,460. We are expended $222,740.08. We have unexpended $120,220. We've spent 65% of the budget. Am I interpreting that right?
Yes.
Okay.
But we have 13 of these particular accounts that are over their line item budget. And we are at 65, I believe that's about where we're at in the year. But
60.
So if we have several of these line items, we have some line items 200%. So either we're not allocating the funds appropriately or in the right account.
No doubt we need to keep an eye on that, too.
Yeah, the transportation is something I think we do have to take a look at for next year. As far as some of the others,
Okay.
what we go by also is the departmental budgets, so that some of the line items that you talked about are within a particular department. But if overall that department is under budget, they can move money back and forth. At least that's what.
And then just let me finish up the one other thing. Athletics, page 26, the subtotal, total year budget, $842,960. We've expended $492,385.69, which means that we have left in the budget $344,593.49. We have spent 59% of the budget, or we're under budget as a percentage of the year.
When I see line items approaching 200% over, again, we don't have appropriate budgeting protocol in place, or are we going to be paying more for dues and fees across the board? And so we'll have to look at this going forward, because we have a bad practice of looking at what we budgeted last year and not what the actuals were.
Tim,
So when we build the next budget for the coming year, I think we need to be very careful at looking what actuals are, so we can take into account any increasing dues and fees, gas prices, overtime because we're reducing staff, all of those things that could significantly impact our budget.
Tim, I got one other question for you. This budget that we have here that Laura's quoting, did you develop this budget?
No, I didn't put this together,
Legacy.
but I do.
What does it have to do with it?
I mean, I do agree that if you're looking at preparing next year's budget,
Right.
you should be looking at actuals and not
Right.
budget, so. But the department heads, they get their departmental budgets, and they know that if they're over in one area, they have to come in under in another area. And so that, you know, if the dues and fees were higher this year than what was projected for one particular reason, then that money has to come out of supplies or purchase services.
And you are monitoring that right now?
Yes, they get a report every single month. You know, we run a report every month. I look at all those reports. I put in here that out of 45 cost centers, there were 2 that are over budget. One is fiscal services, is over because of the cost of the appraisal that hadn't been budgeted, and the other is food service, we're over budget because of repairs on equipment that we're over budget, we had to repair the equipment.
Tim, I have a question for you, because we can't necessarily control the revenue stream on the timing of the revenue stream, but we can control what we spend out the door. With your anticipation that property tax revenues are going to wind up being under budget, have you started discussions on possibly looking at particular line items where we cannot spend?
In terms of expenditures?
Yeah, for this current year.
Yeah, I think that's something that Kevin and I, going to start to look at in terms of, where can we, on certain line items, say, okay, we're not going to spend the rest of that money on the budget.
Okay.
Yes.
Thank you.
Any other questions for Tim?
Yeah, so Laura's brought up a good point, but, I mean, at a very small level, a certain part of a small account could have natural fluctuations in it. But you're telling me the department heads basically are responsible for this whole group of accounts or whatever, so they're ultimately responsible. If one's over, the other one's got to be under.
Right.
Okay, that's what I need to know.
All right, any other questions? Thank you, Tim, great job. All right, next one up is our 213 budget update.
There should be a handout. We had to update one more thing on the chart. Pam, can you pass those down? So I included a chart in the packet. We added an additional .4.
Are you passing them?
The one you received in your packet had 12.8, it's 13.2. We added an additional .4 as we still work with our master schedule on some of this. This will be the most significant reduction for next year's budget development as we try to reduce the deficit. So right now with the reduction in force, right now we're reducing as if department chairs were not funded. So it comes out to be about 13.2 with about a .4 extra flexibility built in there for some flexibility in the master schedule, which we'll continue to work on. The goal would be to try to, as we begin to finalize some of these pieces, it's kind of like a game of dominoes. As some of those fall into place, other things will fall into place. So tonight in closed session, we'll vote, or we'll propose to the board to reduce in force. I think it comes out to be some 16 teachers or something, including part-times and leaves of absences and something of that nature. But at the end of the day, we're more or less projecting it will be around a reduction of 10 total teachers for next school year, and with a cost savings of about $900 to about $980,000. We have the administrative pay freezes already in there, so that's about 15. We're looking to save close to 50 on the assistant principal. We're still determining athletics. That will be proposed and voted on hopefully in April. We still need to do non-certified staffing. But we're right now projecting, Tim and I, as we work on the expenditures for next year, as we do budget development, close to a reduction of about $1.2 million. And so that would leave us with about $300,000 to $400,000 deficit for next school year. Anybody have any questions on that?
All right,